Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, July 22nd. The year's 2021. Let's talk trading. Good trading is repetitive. So is bad. Part 4 with Walmal. Today's video is for educational purpose only. Your results may differ from mine and from Walmal's. Walmal, you're back with us here. Has
Yes.
your trading been repetitive this week?
It has been. It's been a very, very good week for me. I cannot complain. It's been very, very repetitive. And what's even more important, it's the good trading that's been repetitive. And I've had some bad trades. In fact, I was just on on this phone call with you, probably about 15 minutes ago. I went and admitted that I went and got myself into a little bit of trouble and, took a bad trade, but I didn't repeat that. In fact, it's been very, very good trading since then because I recognized, the whole idea that this was a trade that I probably shouldn't have taken. I jumped into the trade a little bit too early, and I took a loss on it. That's part of trading. You just take losses. And in one sense, you can even say that that's good trading though too, because recognizing, oh man, I made a mistake, and you react well to it. And what I mean by react well to it is cut your losses. Put your dunce cap on your head for a few minutes, sit in the corner, smack your hand, and don't repeat it. That's good trading. Because that's what you need to do. Because we're human. We're going to make mistakes. We're going to do things. We're going to say things. We're going to react to things that that we probably would regret. And the thing is, the difference between I'll go on a moral tangent for a second. The difference between a good person and a bad person is we all go and make those mistakes. But what a good person is, they recognize what they did, and then they go and try to the best of their ability not to repeat that. And the things that they do well, they go and repeat that. And that's what we got to do in trading as well. Recognize that, hey, I made a mistake, I messed up, cut the loss, move on, wait for the next opportunity, and do it right. At least that's what's worked for me.
Right. Well, you said you took a bad trade, and the main thing is you didn't repeat that mistake. So, are you going to add something to your trading plan, or make a little post-it note, or stick it on the screen? Don't do this.
No, I really don't need to, because the thing is, it's there already. It's just I ignored it, and that was the mistake I made. I was like, what happened was I had a really good sneaky suspicion that the pound dollar was going to go up today. And I was right, it did. It exploded up. But I didn't wait for my signal to get in. I just went in, impetuously went and jumped in. And of course, when it happens, sometimes it'll run against you and run against you big time. And it's like, dude, you didn't go and wait for your signal. You didn't go and wait for when you're supposed to get in. And it's not all the time that you want the best price of something. It's more of, hey, it can still, just because you have a really good feeling that it's going to go in a particular direction doesn't mean that it's going to happen right this minute. Wait for it. There's a YouTube blogger out there. He has a famous saying, wait for it. And that's what you got to do. You got to wait for your trade. You can't just jump in. And that's what I did. I jumped in too early, and I paid the price for that. And the thing is, what happened was I slapped my hand and said, okay, I'm going to wait for it. I'm going to wait for that trade to come along, and I'm going to wait for that, for that opportunity. And next thing you know, I made up that loss and then some. And that's what we have to do as traders. Don't harp on your losses. Just, it's going to happen. You're going to make mistakes, and and that's okay.
Yeah, and the other thing though about that is you can do everything right, put on a good trade, but it could still be a loser, and you just have to accept that fact and not try and not go in and change things. Just repeat what you did, because the same signal the next time could pay off, and then the next then after that it'll start paying off again. But just
that's exactly right.
Just from statistically speaking, none of these methods are going to win 100% of the time. So you have to take your losses as part of the inherent productivity, let's call it, or profitability of the method.
That's exactly right. I mean, I see traders all the time. What they'll do is they, just, maybe I don't want to say with beating a dead horse or anything, but, they'll go and they'll try a method, use the method, do the method, and it works a couple of times. Then they take 3 or 4 losses on it. And next thing you know, a method that we know statistically works, they throw it out, they throw the whole thing out. Or worse than that, they start tweaking it, to the point of, it's not even the method anymore. And that's what we have to be careful with. You need to just go and trade it and see it. And when I say trade it and see it, you can't be changing methods every other day. And that's what so many traders do. I have a good friend of mine. He got into trading about the same time that I did, back in 2006, 2007, something like that. And he's not trading anymore because what he was doing was he was just literally hopping from bus to bus to bus looking for that perfect method, and he was just blowing one count after another instead of just sticking to something, learning it inside and out, and then saying, yeah, this is going to work, or yeah, no, this is a problem, this is not going to work for me. You can't be doing that. You need to go and sit there and give it a fair chance, because the reality is, let's say a method wins 80% of the time. Let's say you take 100 trades. It's not likely, but you could take 20 losses in a row. In fact, you could take 40 losses in a row and then win the next 160. And you'd still have an 80% win profit, a win rate.
Right.
That's just the reality of what trading is. So you got to give things a chance, and that's part of good trading, is just saying, okay, I'm going to go and do what I see. I'm going to react to what I see, and I'm going to follow those rules.
Yeah, and one of the funny things is, we have a few traders that like to post on Facebook, and they reply to these videos, and so seems like there's always a few people who want to sit there and basically I don't know if they're trying to outsmart the person, or they want to say what's wrong with it, but they go through these long explanations or dissertations when like, for example, these methods are simple. We can explain the method, it'll fit on a 3x5 card.
Right.
But but they give some explanation that's going to take half a ream of paper. I'm exaggerating slightly. Point being is that when you approach something, and if you don't know how to do it, then you need to learn it before you start slinging arrows.
Yeah, and I think that's part of, unfortunately, when we're dealing with money is a very, very emotional thing. Let's just be honest about it, because it's what puts food on the table. What's more emotional than food? Maybe sleep, but that's about it.
Well,
and that's par for the course, I think.
Yeah.
But what we need to do is we have to sit there and, and it's even like we talk about the Walmal method, with 10-5-1, that the whole idea is that, yeah, in a great day, I get 10 pips on one particular trade. But I'm going to be honest with you, I'm not looking to get 10 pips on any particular trade. I'd love it if I get it, but I'm not going to get it every time, and I know I'm not going to get it. So sometimes I'll go and, like, for instance, on this hour, the long would have been at 70. I could have picked up 15, 20 pips, 15, 18 pips on this trade. Would have been wonderful. That doesn't happen all the time. That's in fact, that's probably a rarity. But, at the same time, if you go back to the previous hour, you could have sat there and picked off, 5-6 pips several times just doing the Walmal method, and you say, well, that doesn't really fit in with 10-5-1. Well, yeah, it does, because what happens is when I say 10-5-1, if I hit 5 pips, okay, what that means is it doesn't mean I immediately move my stop loss to one pip. Okay, what it does mean is I make the decision based on what the market's doing. Do I move my stop loss to 1 pip and take the chance that it's going to go to 10? Okay, or do I just take the 5 pips and get out of Dodge? And that's the part that I think a lot of traders have difficulty in, because there's an intuition part to that, because it's the type of thing where you just learn how the market moves. We were on the phone yesterday, and I know you can go and back me up on this. I went and said, if it goes and breaks 3688 or 3686, I'm sorry, it's going to 3700. It's going to go. It's going to sit there for a while, and once it breaks 3700, it's going to the moon. What did it do? I don't have a crystal ball. There's nothing. I don't have I forget the name of that cat, the cartoon cat. With his bag of tricks. I don't have a crystal ball sitting in that bag of tricks that tells me that it's going to absolutely do that. But looking at the market, looking how market had moved, looking how the last couple of days before that were down days, and they were probably over. What the market experts like to say, it was oversold. It became pretty obvious to me that's where the market wanted to go. And that's why I called that out to you.
Right.
And what did it do? That's part of the good trading bag of tricks that comes with time.
Mm-hmm.
And you're much better at that than I am, because I think partially because you've written all these indicators,
right?
And so what happens is you're able to see those things on the screen without even having the indicator on the screen sometimes. So you're much better at that than I am. I can tell where price is going to go in short term pretty well, but long term I sometimes struggle with it. But at the same time, it's like I said to you before, I wish I would have just had the fortitude to go and throw a couple lots on it, yesterday when I said that, and just let it go and see what it does.
Yeah, well, you're saying about, I guess, calling out where price is going to go, eventually. It's one of those things. If you wait long enough, you're right. For example, I told the boys and girls and non-binary traders, I said, yesterday I looked and it launched from the 3640. Well, look what happened at the 3740. Price came up to 3740, ran up to, somewhere in the mid 50s. Then it came back down to the 40. But, the trick there is knowing if it's coming down to the 40, it's going to have to probably go past it, and then put in a 3-ball somewhere near the bottom. So right here I'm showing on the screen, it went up. You could have gotten 4 or 5 pips out of these trades, and then the next one you could have gotten a couple pips, and then the next time it came up a couple, and then sooner or later it ran up and it took you up to the 60, which I know it does. And you said about predicting, I'm sitting here looking at the chart right now. I'm seeing a couple of a nice big M5 candle. So I'm looking at it, and the open on this candle was at 54.9. The open at this candle is at 53.1. And I'm thinking, yeah, price is probably going to come back down there. And then eventually it's got to come back down and take out this candle open at 19.1, because those are all what we call return bars. Will it hit it? Maybe, maybe not, but it's just one of those things I would look for it to do. And then maybe in a day or so it's like, yeah, it hit it. Or for example, we were looking at the pivots. Let's see, let me find the pivot chart. It's around here somewhere. The missed pivots. Well, yesterday it took out the missed pivot from the previous day, and today we've got a missed pivot down at 36.72, and from 3 days ago we've got a missed pivot at 37.94. Chances are, based on statistics, those pivots are going to get taken out. Based on statistics, the fastest 15 minutes is trading is up once again. I can't believe how fast this goes by. So, fellow traders, once again, if you're making a trading journal, or if you just look over your trades, see what you've done that works, repeat that. See what you've done that didn't work or wasn't profitable, and eliminate that from your trading. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.